This week, the AI trade moved beyond NVIDIA. SpaceX tested IPO hype. Oracle showed the debt risk behind AI cloud. Marvell moved closer to becoming a core index holding. And data center power stocks reminded investors that artificial intelligence does not run on chips alone. This is not a full stock market recap. This is the AI Stocks Weekly filter, 5 AI, IPO, infrastructure, and valuation risk stories investors should watch before next week begins. The goal here is simple. We are not trying to predict next week's stock prices. We are filtering noise. For each story, we will ask 3 questions. First, what changed this week? Second, why does it matter for investors? And third, what should you watch next week? At the end, I will rank the 5 stories by investor risk, not by hype. Filter number 1 is SpaceX. SpaceX is the biggest AI-adjacent IPO story in the market right now. But the important part is no longer just the IPO pop. The important part is what happens after the first wave of excitement fades. This week, SpaceX's IPO proceeds increased after underwriters exercised the green shoe option. That pushed the total raise even higher, making the offering even more historic. But then the stock started to cool. That matters because post-IPO trading often reveals something the first day pop does not, whether investors are buying a business or buying a story. SpaceX is not just a rocket company in the public market narrative anymore. It is also being priced as a space, satellite, connectivity, and potentially AI infrastructure platform. That creates the bull case. If investors believe SpaceX can dominate launch, expand Starlink, and build AI-related infrastructure or connectivity businesses, the premium valuation may look easier to justify. But there's also a bear case. When a company becomes one of the most valuable names in the market almost immediately after listing, the risk is not only business execution. The risk is expectation inflation. A great company can still become a dangerous stock if the valuation assumes too much too early. For investors next week, the question is not simply, is SpaceX a great company? The better question is how much future success is already being priced in. Filter number 2 is Oracle. Oracle is a different kind of AI stock story. It is not a new IPO. It is not a speculative small cap. It is not a pure chip company. Oracle is an older technology giant trying to reposition itself as a major AI cloud infrastructure company. And this week, the market got a clearer look at both sides of that transformation. The bull case is obvious. Oracle's cloud infrastructure business is growing fast. The company is benefiting from demand for AI compute, cloud capacity, and data center infrastructure. That is the good side of the story. But the risk side is also becoming harder to ignore. AI cloud infrastructure is extremely capital intensive. Oracle has to spend heavily on data centers, hardware, energy, and capacity before investors can know how profitable this AI cloud build-out will be over the long term. That is why this story matters for investors over 30, 40, 50, or 60. Oracle may feel like a safer AI exposure than a fresh IPO or a quantum stock. But if the AI transition requires massive debt and years of negative cash flow pressure, the risk profile changes. In other words, the question is not just whether Oracle can grow. The question is whether Oracle can fund that growth without damaging shareholder returns. Filter number 3 may be the most important theme of the week. AI stocks are becoming power stocks. For the last 2 years, most investors focused on chips. NVIDIA became the symbol of the AI boom. Then the market moved to custom chips, networking, memory, and servers. But now the bottleneck is expanding. AI needs electricity. AI needs cooling. AI needs backup power. AI needs data center construction. AI needs physical infrastructure. That is why stocks like Vertiv are getting more attention. Vertiv is not selling the AI model. It is not selling the chatbot. It is not competing directly with NVIDIA. It provides power management, cooling, and infrastructure systems that data centers need if AI workloads continue to scale. That makes this a picks and shovels story. The bull case is that AI demand keeps expanding and power and cooling become critical bottlenecks. In that world, infrastructure suppliers may capture durable demand, but the bear case is valuation. Once the market labels a company an AI infrastructure winner, investors can push the stock far ahead of the fundamentals. The same theme also showed up in recent IPO activity. INEO, a gas engine maker tied to data center power demand, had strong investor interest because the market is now looking for every layer of the AI power stack. This is why next week matters. If investors keep rotating from chips into power, cooling, and data center infrastructure, the AI trade could broaden. But if these stocks become crowded, the same valuation risk that hit AI software and AI IPOs can hit infrastructure names too. Filter number 4 is Marvell. Marvell is important this week because it connects AI chips with retirement portfolio risk. The company is being added to the S&P 500 before trading begins on June 22nd. That may sound like a technical index event, but it matters. When AI-related companies enter major indexes, passive investors may gain more AI exposure automatically through index funds, ETFs, and 401k plans. This does not mean Marvell is bad. It means the AI trade is becoming more embedded in the market. The bull case is that Marvell is positioned in custom silicon and data center infrastructure, which may become one of the biggest second-wave AI themes. Big tech companies want alternatives to expensive and limited AI accelerators. Custom silicon could be a major growth area. But the bear case is expectation risk. Broadcom already showed investors what can happen when AI expectations are very high. Even strong companies can disappoint if the market demands perfection. So next week, Marvell is not just a chip stock to watch. It is also a signal of how deeply AI is entering the core of passive U.S. equity exposure. Filter number 5 is Databricks. This one is not a public stock yet, but it matters because it tells us something about the AI IPO market. Databricks is reportedly looking at private funding instead of rushing into the public market. The potential valuation discussed is extremely high, and that creates an important signal. The best AI companies may not need to go public quickly. That is good for the company, but it may be bad for public market investors. Why? Because by the time many AI leaders finally reach the public market, much of the early value creation may already be captured in private markets. Retail investors may only get access later at higher valuations with less margin of safety. This is the same risk we saw in other IPO stories. Strong company does not automatically mean attractive entry price. That is why Databricks belongs in this week's filter. It shows that the AI IPO market is still selective, still expensive, and still difficult for public investors to evaluate. Now, let's rank these 5 stories by investor risk for next week. Number 5, Marvell. The risk is real because AI expectations are high, but the S&P 500 inclusion gives the stock a clear catalyst. This is a watch list story, not necessarily the highest risk story this week. Number 4, Vertiv and AI power stocks. The theme is strong. The risk is whether investors start overpaying for every company connected to data center power and cooling. Number 3, Oracle. Oracle has real AI cloud momentum, but the debt and CapEx story makes this more complicated than a simple growth narrative. Number 2, Databricks. This is a private company, but it may be one of the clearest warnings about AI IPO valuation. Public investors may be forced to wait until valuations are already extreme. And number 1, SpaceX. SpaceX is the highest risk story this week, not because the business is weak, but because the stock is now carrying enormous expectations immediately after a historic IPO. The market is not just pricing rockets, it is pricing space, satellites, connectivity, AI optionality, index demand, and the Elon Musk premium all at once. That makes SpaceX the main story to watch next week. So, here's the weekly filter. Do not watch only NVIDIA. Do not chase every AI IPO. And do not assume that AI infrastructure is risk-free just because the demand is real. Next week, I'm watching 3 things. First, whether SpaceX stabilizes after the IPO pullback. Second, whether Oracle's AI cloud story can overcome balance sheet concerns. And third, whether investors keep rotating into data center power and custom AI chip stocks. This is not financial advice. It's a weekly filter to help investors separate opportunity from risk. If you want the deeper breakdown, watch the SpaceX IPO risk video linked on screen. And comment below which story matters most next week: SpaceX, Oracle, Marvell, Vertev, or Databricks.